Good day. Hope you guys are doing well. So today we'll be doing accounting paper 2, June 2025. So now we can start. Question 1, we have our cost accounting. Says indicate whether the following statements are true or false. Write only true or false next to the question numbers 1.1.1 to 1.1.3 in the answer book. The salary of a foreman is part of the indirect material cost. So it's false because the salary can't be part of the indirect material cost. So 1.1.1, we have false. Carriage on raw materials purchased increases the cost of raw materials issued for production. So here our answer will be true. 1.1.3, profit on disposal of office equipment is part of administration cost. So no, our answer is going to be false. 1.2, we are required to calculate the cost price of the direct material issued to the factory for the year ended 30 April 2025. So we have our opening stock. We have to record our net purchases. Net purchases, we are talking about our purchases minus the returns. Then we also need to record our carriage on purchases. We also need to record our custom duties. Then we minus our closing stock. So let's go to the information that affect our direct material cost or our raw material. So now we have the opening balance of raw material stock, which is 38,000. And also we have the closing balance of our raw material stock, which is 24,222. So here opening stock, we have 38,000. Closing stock, we have 24,222. So since we minus the closing stock, we're going to put it in brackets. Raw materials worth 280,000 were purchased on credit during the year. So this is our first purchase. So here under net purchases, we have 280,000. Transportations on raw materials amounted to 2% of purchases. So we purchased raw materials for 280,000 and the 2% it's for transport. So we're going to say 280,000 times 2 divided by 100. Then we get our answer, which is 5,600. So this 5,600, it will be our cost for carriage on purchases. Raw materials worth 5,400 were damaged in the storage area. The raw materials were not insured. So since the raw materials were damaged, it means it's going to decrease our purchases. So we go to our purchases, we minus the 5,400. Material not as per order was sent back to the supplier. A credit note was received from the supplier for the following. So 2,600 for material, not note as per order. So we return the stock for 2,600. It means this will affect our net purchases. So under net purchases, we have minus 2,600. Then you also have 52 Rand for carriage on purchases. It means this 52 will decrease our carriage on purchases. So carriage on purchases, we're going to say minus 52. Some raw materials had to be imported from China due to high demand. A payment of 2,300 in Chinese currency was made to the supplier. Okay, since we paid the supplier, we paid 2,300 for an exchange rate of 2 rand 60 cents. So we have 2,300 times 2 rand 60 cents. Then we get 5,980. So since we paid the supplier, it means it's going to form part of our net purchases. So plus 5,980. Custom duties on these goods was levied at 30% and was paid to SARS when the goods arrived in the country. So we bought goods for 5,980. So now the tax is 30% and the import duties. So you're going to say 5,980 multiplied by 30 divided by 100. Then we get our answer, which is 1,794. So here under custom duties, we have 5,980 multiplied by 30 divided by 100. Then our answer is 1,794. So now let's close off our net purchases. 280,000 minus 5,400 minus 2,600 plus 5,980, we get 277,980. Then our carriage on purchases, we say 5,600 minus 52 rand. Then we get our answer, which is 5,548. Then to get our direct materials issued, we're going to say our opening stock of 38,000 plus net purchases of 277,980 plus carriage on purchases of 5,548 plus custom duties of 1,794 minus our closing stock of 24,222. Then we get our direct materials issued, which is 299,100. So 1.1.2, we have to calculate our direct labor cost. So information for direct labor cost, it's our information C. Easy Drink Manufacturers employs 5 factory workers at a normal rate of 38 rands per hour. Together, they worked 200 hours per week for 45 weeks of the year. Easy Drink Manufacturers contribute to the UIF on a rent-to-rent basis. Employee deductions for UIF are 1% of normal rate. A total of 284 overtime hours was booked during the year. Overtime is paid at a 1/4 times the normal rate. So we have 200 hours, then it's 38 rand per hour, then multiplied by 45 weeks. Then we get the normal rate, which is 342,000. So here we have 200 hours for 5 employees and they earn 38 rand per hour. So they worked 200 hours for 45 weeks. Then we get our answer, which is 342,000. Easy drink manufacturers contribute to the UIF on a rent-to-rent basis. Employee deductions for UIF are 1%. It means for each and every $1 that the employee, for each and every $1 that is deducted from the employee, the employer also contributes 1%. So now, if the employee pays 1%, it means also the employer will pay 1%. So we want 1% of the 342,000, which is 3,420. So here we have 342,000 times 1%. Then we get 3,420. A total of 284 overtime hours was booked during the year. Overtime is paid at 1 and a quarter times the normal rate. So now, our normal rate, it's 38 Rand. So we want the quarter of the 38 Rand. So 38 times 1 divided by 4. Then we get our answer, which is 9.5. So remember they said it's 1 and a quarter. So now we have found the quarter. We have to add it to the 1, which is our 38. So we're going to say 9.5 plus 38. Then we get our answer, which is 47.5. So they work 284 hours, earning 47.5. So 47.5 multiplied by 284 hours. Then we get the overtime rate, which is 13,490. So here we'll just say 47.5 times 284. Then we get our answer, which is 13,490. Then to get our total of the direct labor cost, we're going to say 342,000 plus 3,420 plus 13,490. Then we get our total of 358,910. So now 1.2.3, we are required to complete the factory overhead cost. So we have information D, other expenses. So purchased indirect materials were 36,550. During the year, 35% of total indirect materials is used in the factory. Okay, so now we're going to start with our indirect materials. So let's check the information that affect our indirect material. So we have the opening balance of indirect materials, which is 7,400. We also have the closing balance of the indirect materials, which is 8,150. So we'll start with the opening balance. So we have 7,400 plus the indirect materials that were purchased for 36,550. So plus 36,550. So now 35% of indirect materials is used in the factory. So now we have to minus our closing stock. So our closing stock for indirect materials, it's 8,150. So now we're going to say 7,400 plus 36,550 minus 8,150 multiplied by 35%. Then we get our answer, which is 12,530. The factory foreman received a gross monthly salary of 13,000. He also received a bonus equal to 1 month's salary. So now we have our indirect labor cost. We are told that the factory foreman earns a gross salary of 13,000. He also received a bonus equal to his 1 month's salary. So we're going to say 13,000 multiplied by 12 plus another month of the bonus, which is 13 months. Remember, we pay our factory foreman for 12 months, but now they receive also another payment. So we paid 13,000 for 13 months. Which is 169,000. The following amounts were extracted from the pre-adjustment trial balance on 30 April 2025. So water and electricity. The water and electricity account is up to date. Water and electricity is allocated to the department in a 7:2:1 ratio. So 7 for the factory, 2 for administration, and 1 for our sales department. So here we have water and electricity. So let's check how much is our amount for water and electricity. So water and electricity, we have 18,954. And we are told that it should be distributed using the ratio 7:2:1. So this water and electricity is for administration. How much is the ratio for administration? It's 2. So what do we want? We want the 7 multiplied by what do we have, which is the 2. Then we get our answer, which is 66,339. Also have rent expense. The rent was increased to 5,600 per month on 1 March 2025. The rent for May 2025 has already been paid. Rent is so now we have our rent of 66,800. Then we minus the 5,600. The rent for May 2025 has already been paid. We are minusing this 5,600 because it's the increase for May. 2025. Rent is allocated to the floor space of each department. The factory occupies 610 meters, the administration 220, and the sales department 170. So now we're going to calculate our total floor space. Going to say 610 square meters plus 220 plus 170. Then we get our total floor space of 1000 meter square. Then what do we want? We want the one for the factory, which is 610. So here, multiplied by 610 divided by 1000 square meters. So 66,800 minus 5,600. We get 61,200 multiplied by 610 divided by 1,000. Then we get 37,332. Insurance was initially allocated to the factory, the administration department and sales department in a ratio 3:1 per era. The correct allocation should have been in a ratio of 3:2:1. So now they allocated the insurance using the wrong ratio, which is 3:1:1. It means now our factory took 3. Then our administration took 1. We also have our sales department took 1. Only to find out this is the correct ratio. So here we have insurance. So now let's check how much is our insurance. Our factory insurance is 15,000. So now here we have 15,000. Then we go back to our information. In a ratio 3:1:1. So now we're gonna firstly get our total ratio. So our total ratio is gonna say 3 plus 1 plus 1. Then we get 5. Then we calculate another ratio, which is 3 plus 2 plus 1. Then here we get 6. So now, since the insurance is directed to the factory, what do we want? We want the 6, which is our total insurance. Divided by what do we have? Which is we want the 5, divided by what do we have, which is the 6. So now 5 multiplied by 6 times the amount of insurance that you have, which is 15,000. Then we get our insurance of 12,500. The telephone bill for April has not been paid. It means it's accrued. 1,825 of the bill will be allocated to the factory. So we have a factory overhead, we have our telephone. Then now, how much is our opening balance of our telephone? Our opening balance of our telephone is 10,000. So we're going to open our bracket and record the 10,000. And we go back to our information. It says the telephone still has to be paid. So if it's accrued, we add. We're going to add the 1,000 1,825. So plus 1,825. So 10,000 plus 1,825, we get 11,825. So now we are done with the transaction. Let's check what we haven't recorded. We haven't recorded our depreciation. So we haven't recorded our depreciation on our factory equipment. So our depreciation on factory equipment, it's 28,690. Then we can calculate the total of our factory overhead cost. So we're going to say 12,530 plus 169,000 plus 66,339 plus 37,332 plus 12,500 plus 11,825 plus 28,690. Then we get our total of 338,216. Then 1.3, it's Segal manufacturers. So we have to fill in the missing figures. So we have the total, we have the unit cost in 2025, we have the unit cost in 2024. Segal manufacturers, the business manufacturers key holders, and is owned by Lisa Segal. The financial year ended 31st March 2025. We are required to complete the missing figures. We are also required to calculate the unit cost of production and the break-even point. You also need to comment on the level of production and the break-even point of the company. We are given the number of units made and sold. So in 2025, 25,000 units were made and sold. So the direct material is 250,000. To find the unit cost, we're going to say 250,000 divided by our 25,000. So we're going to say 250,000 divided by 25,000. Then we get our answer, which is 10 rand. So now let's go to our answer sheet. So in our answer sheet here, we have 10 rand. Then now let's move to our direct labor cost. So we are given the unit cost of 25 rand. So we're going to say 25 rand multiplied by the number of units that you have produced, which is 25,000 units. Then we get our direct cost of 625,000. Here we have 625,000. Then now to get our direct labor cost, we're going to do the bottom up. 625,000 minus 250,000. We get our direct labor cost of 375,000. Then to get the number of units, we're going to say 375,000 divided by 25,000 units. Then we get 15. So now we are done. 1.3.2, they say we should calculate the unit cost of production for 2025. So here we have 2024, we have 2025. So now we're going to say our prime cost of 625,000 plus our factory overhead cost of 200,000. Then we get our answer, which is 825,000 divided by the number of units that you have produced and sold, which is 25,000. Then we get the unit cost, which is 33. So here we have 625,000 plus 200,000 get 825,000 divided by the number of units that were produced and sold, which is 25,000 units. Then we get our answer, which is 33. Then 1.3.3, we have to calculate the break-even point for 2025. So now the formula of calculating the break-even point, it's our fixed cost divided by our selling price per unit minus variable cost per unit. So now, how do we get our fixed cost? So our fixed costs, we have the factory overhead, which is 200,000. We also have the administration cost, which is 75,000. So here our fixed costs, we have 200,000 plus 75,000. Then we get 275,000. Then now, how much is our selling price per unit? Our selling price per unit is 60 rand. So divided by 60, then minus our variable cost per unit. So our variable cost per unit, we have our direct cost, which is 25 rand. 25 rand, then we have to add also our selling and distribution. So 60 minus 25 plus 4. So it's 60 minus 19. Then now our minus 9. Our break-even point will be 8,871 units. 1.3.4. Comment on the level of production and the break-even point of the company in 2025. So now 2025, they have produced 25,000 units. while their break-even point is 8,871 units. So we're going to say in 2025, production of 25,000 units. It's more than the break-even point of 8,871 units. So now we can say the business made a profit. The business made a profit of, then we say 25,000 minus 8,871 units. Then we get 16,121. It means the business made a profit of 16,129 units. So now we have compared our break-even point with the number of units produced and sold. So now we can move. We are done with our question 1. We can move to question 2. So question 2, we have inventories. 2.1, choose the correct stock valuation method for each of the following. Write only the answer next to the question numbers 2.1.1 to 2.1.3 in the answer book. Options to choose from. So 2.1.1, the method that is appropriate for very expensive, individually recognizable items. So 2.1.1, our answer will be the SIM, which is specific identification. The method that assumes that the older stock is sold first. So it's going to be FIFO because it's first in, first out. The method that divides the total cost of goods available for sale by the number of units. It will be our weighted average method. So now let's transfer our answers to our answer sheet. So here we have specific identification. Then 2.1.2, we have the first in, first out. Then 2.1.3, we have our weighted average method. So 2.2, we are required to calculate the value of the closing stock using the weighted average method. So Mango brand owns this business. The business uses the periodic inventory system. The year end was on 28 Feb 2025. We are required to calculate the value of the closing stock using the weighted average method. We are required to calculate the cost of sales, the gross profit, and the percentage markup, and the value of the closing stock using the FIFO. So now let's go to our information. So this is our stock in information A. We are given the opening balance of cricket bats, which is 350 units, and the total cost is 420,850. So how do we value our inventory using the weighted average price? So what is the formula of calculating the weighted average price? We're going to say our total value of our stock divided by the number of units. So our opening stock, we have 420,850. So we have our opening stock, which is 420,850. Then we have our purchases, which is 4,302,500. Total transport cost of stock purchased during the year is 110,250. So we're going to add it because it's our carriage on purchases. Plus 110,350. Then now let's go check, do we have any closing stock? $20 items were returned, and they say these are the purchases from February. So if you can go to February and check the unit price, our unit price is 450. So you're going to say 20 multiplied by 450. No, sorry, our unit cost is 1,525. This is the number of units. $20 multiplied by 1,525. Then we get our answer, which is 30,500. And now the information says refund was received from carriage on the returns. So now how do we get the price? Remember, the units that you have purchased is 3,150 and we have paid 110,250. So you're going to say 110,250 divided by the purchases that were bought, which is 3,150 units. Then we get our answer, which is 35. So also, we have returned 20 units and we paid transport 35 Rand for each unit. So we're going to say 20 multiplied by 35. Then we get our answer, which is 700. Then 30,500 plus 700. Then we get 31,200. Since this is the return and the carriage on return, so you're gonna say the minus 31,200. Then divide, this is the total value divided by the number of units. So units that you have at the beginning of the year, we have 350 units. 350 units. plus our purchases, we have purchased 3,150 units. Plus 3,150 units. Then minus the returns of 20 units. So minus 20 units. So 420,850 plus 4,302,500 plus 110,350 minus 31,200. We get 4,802,400. Then divided by the number of units, which is 350 plus 3,150 minus 20. Then we get 3,480 units. Then 4,802,400 divided by 3,480, we get our answer, which is 1,380. So 1,380 is our average price. Then the number of units that you have on hand is 465. So we're going to say 1,380 multiplied by 465. Then we get our answer, which is 641,700. Then 2.2.2, we are required to calculate our cost of sales. So now we are given the total sales of 5,400,000. And we were told that 3,000 cricket bats were sold at 1,800 each. Okay. So now, how do we calculate our cost of sales? So we have our total units, which is 4,802,400 minus our closing stock of 641,000 that you have calculated, 700. Then we get our answer, which is 4,160,700. Then we are also required to calculate the gross profit. So to get the gross profit, we're going to say our sales of 5,400,000. We have the sales of 5,400,000 minus our cost of sales of 4,160,700, which is the figure that you have calculated. We get our gross profit, which is 1,239,300. Then 2.2.4, we are required to calculate the percentage markup. So now let's go to our information so that we can calculate our percentage markup. What is the formula of calculating the percentage markup? It's the gross profit over cost of sales. So we have calculated our gross profit of 1,239,300. So our gross profit of 1,239,300 divided by our cost of sales. Then how much is our cost of sales that you have calculated? It's 4,160,700. So since we want the percentage, we're going to say multiply by 100 divided by 1. Then we get our percentage, which is 29.8%. So 2.2.5, we are required to calculate the closing stock value using the FIFO method. So we'll check how much is our closing stock. Our closing stock is 465 units. And we were told that in February we purchased 450 units, but from this 450 units we have returned 20 units. So it means we now have 410 units. So now, where are we going to take the price of this 465,000? We're going to start with the most recent one, which is our Feb. So now, how many units do we have under Feb? We have 410 units. We have 430 units, sorry. 450 minus 20, we have 430 units. So we will start by saying 450 units minus the 20 that has been returned. We get 430 units. So we're going to take this 430 units valued at 1,525. Then, plus the amount of carriage that we have never recorded, which is 35 rands. We have already calculated, plus 35. So 1,525 plus 35 for the carriage. We get 1,560. So here we're going to say we have 430 units valued at 1,560. Then 430 multiplied by 1,560. We get our answer, which is 670,800. So now, from our closing stock of 465 units, so we're going to say 465 units minus the 430, because we have already valued our 430. Then we get our remainder, which is going to be 35 units. So now, where are we going to get the price for these 35 units? We're going to use the price for January, because we assume these ones were sold first, because it's the first in, first out. So now, how much are we going to value our 35 units? We're going to use our price of 1,475 plus the carriage of 35 rands. So 1,475 plus 35. Then we get our answer, which is 1,510. So we have 35 units valued at 1,510. Then we get our answer, which is 52,850. Then 52,850 plus 670,800. We get our total inventory of 723,650. Then 2.2.6, the owner here that he could adjust the profit by changing the stock valuation method from the weighted average method to the first in, first out method. Explain the difference between the stock valuation methods to the owner. So now, if the owner chooses to use FIFO, let's start by saying the closing stock value is higher So the closing stock value is higher when using the FIFO method, Therefore, cost of sales will be less and gross profit will be higher. Then you can also say with the weighted average method, the closing stock will be less, cost of sales higher, and profit will be less than the FIFO. So now we can move. Number 2, what advice will you give the owner about changing from one stock to another? What I would say is that he should not manipulate figures or financial information. We can also say he should get permission from SARS before changing the stock valuation method. Then now we are done. 2.2.7. Calculate how long in days it is expected to take to sell the closing stock of 465 cricket bats. So now we'll go to our information, okay, and go to our workings. So if we can go back to our calculations in 2.2.1, we have our closing stock. We have our closing stock, the value of the closing stock. So we're going to say 641,700. Then divided by our answer that you have already calculated also, which is 4,160,700, which is our closing stock. Since we want the number of days, we're going to say multiplied by 365 days. Then we get our answer, which is 56.3 days. Then 2.2.8, provide a calculation to support Mango's brand concern about the control of cricket bats. So now let's go to our information. If you can check the cricket bats, we had the opening stock of 350 units. Then we purchased 3,150 units. Then minus the units that you have returned, which is 20 units. Then also minus the units that you have sold, which is 3,000 units. We get our answer, which is 480 units. So now we are supposed to have 480 units. But on hand, on actual, how many units do we have? We have 465. So it means some units are missing. So we're going to say 480 minus the 465 units. Then we get our units, which is 15 missing units. What entry would you make in the company's books to record this problem? So now, the account debited, it's going to be our loss due to theft. Loss due to theft because it's our expense. That's why it's debited. We can also debit trading stock deficit, which is a shortage of our stock, which is also an expense. Then the account credited, we're going to credit our trading stock. So we credit our trading stock because it's an asset, it's decreasing on the credit side. Or we can also say purchases account. Then the explanation, we will say missing stock will be a loss to the business. Then number 3, how can Mango brand solve this problem? So we know that there are missing stocks. So how can Mango solve the problem of missing stock? So we can say physical regular stock count. That will be the first. Then here we can also say install CCTV cameras. We can also say order smaller quantities of stock, because if it's smaller, we'll be able to see if something is missing. We can also say rotation of duties. Or separation of duties. So we are done with our question 2. Now we can move to question 3. So question 3, it's our management of fixed assets. The information relates to the fixed or tangible assets of Bellius Ltd. The financial year ended 28 Feb 2025. So we are required to calculate the total depreciation on vehicles. We also have to calculate the rate of depreciation used by Bellius to depreciate their equipment. We also need to complete the fixed asset note. We have to also calculate the profit and loss or disposals. So calculate the total depreciation on vehicles for the year ended 28 Feb 2025. Let's go to the information that affects our vehicles. So this is our information. Information B says on 1 July 2024, a vehicle that originally cost 140,000 was traded in for 73,360. When we trade in, it's similar to us buying and selling. We are selling our old asset while we are also buying our new asset. The new vehicle cost is 216,000. So since we bought the new vehicle, this will be our additions at cost. So here under additions, we have 216,000. We'll start by calculating depreciation of new. So we have 216,000, which is our cost. The accumulated depreciation on the vehicle sold was 59,360 on 1 March 2024. Vehicles are depreciated at 20% per annum on the diminution balance method. So since this asset is new, it won't have any accumulated depreciation. So we're going to say our cost of 216,000 multiplied by our rate of depreciation, which is 20%. So now we have to know how many months did you use it for. So the first thing that you are supposed to do is to draw our timeline. So when we draw our timeline, we check when did our accounting period end. Our accounting period ended 28 Feb 2025. So our accounting period ended 28 Feb 2025. It started 1st March 2024. So our first step is to draw the timeline. Then our second step is to interpret our information using the timeline. On 1 July 2024, a new vehicle that original cost 140,000 was traded in. So we have March, April, May, June, July. So here we have 1st July 2024. That's when we bought our new vehicle. So when did you start using it? We started using it 1st July 2024. So how many months did you use it for? It's going to be July, August, September, October, November, December, January, February. So it's going to be 1, 2, 3, 4, 5, 6, 7, 8. So it's going to be 8 months. So you're going to say multiplied by 8 divided by 12. Then we get our answer, which is 28,800. This is depreciation of new. No entries have been made to record any above transactions. So new equipment was purchased on 31st August 2024. This has been correctly recorded. The depreciation on the new equipment amounted to 11,250. Equipment is depreciated on cost price. Okay. So now we have our additions at cost, which is 216,000. So what we need to calculate now is our cost price of the asset that was disposed. So now, how are we going to calculate the cost price of our asset that was disposed? So now we're going to say our cost price of the vehicle that was sold, which is 140,000. Since we are using the diminution balance method, the formula of calculating depreciation using the diminution balance method, it's our cost price minus our accumulated depreciation. So let's go check how much is our accumulated depreciation. The accumulated depreciation on the vehicle was 59,360. So we minus our accumulated depreciation of 59,360. Then we get our carrying value. Then our carrying value will be 80,640. So we're going to say 80,640 multiplied by the rate of depreciation, which is 20, divided by 100. Now we have to calculate the number of months. So this vehicle, we started using it 1st March. Then we traded in on 1 July. So how many months did you use it for? 1, 2, 3, 4. If it was 31st July, we're going to count July as our 5th month. So we're going to say 4 divided by 12. Multiplied by 4 divided by 12. Then we get our answer, which is 5,376. So now we have to calculate depreciation of old. So if you can check our old, our cost price at the beginning, it was 850,000. From this 850,000, we sold a vehicle. So we have 850,000. From this 850,000, we sold a vehicle with a cost price of 140,000. So it means we're going to minus the 140,000 because it was sold. So 850,000 minus 140,000. We get our cost, which is 710,000. So now we also need to calculate the accumulated depreciation. So accumulated depreciation at the beginning of the year, it was 320,000. So we're going to say 320,000. But from this 320,000, there is an accumulated depreciation of a vehicle that was sold. And how much is that accumulated depreciation? It's 59,360. So we're going to say minus 59,360. Then we get our answer, which is 260,640. So you're going to say our cost price of 710,000 minus our accumulated depreciation of 260,640. Then we get our carrying value of 449,360. Then times the rate of depreciation, which is 20 divided by 100. The old, it's always 12 over 12. Then we get our depreciation, which is 89,872. So to get our total depreciation for vehicles, we're going to say 28,800 plus 5,376 plus 89,872. Then we get a total of 124,048. 3.2, we are required to calculate the rate of depreciation used by Bellias Ltd to depreciate their equipment. So let's go to information given about the depreciation. So the depreciation given on the new equipment is 11,250. So now, when was this equipment, new equipment bought? It was purchased 31st August 2024. So the first step that you are going to do here is to draw the timeline. So our accounting period ended 28 Feb 2025. It started 1st March 2024. 24. So we have 1st March 2024. So our second step is to interpret our information using the timeline. When was this new equipment purchased? 31st August 2024. So we have March, April, May, June, July, August. So since it was bought 31st August 2024, which was last day of the month, it means when did you start using it? We started using it the following month, which is September, October, November, December, January. So how many months did you use it for? 1, 2, 3, 4, 5, 6. So we used it for 6 months. So we know that we have the 11,250, which is our depreciation for 6 months. What do we want? We want the full amount, which is 12 divided by the 6 months that we have. Then we get our answer, which is 22,500. So now let's go to our information and check how much is the price of that. Addition set cost, it's 150,000. So we're going to say, what do we want? We have the depreciation of 22,500. That's what we want. Divided by the total cost of 150,000. Then multiplied by 100 because we want the rate. Then we get our answer, which is 15%. So in our answer book, we're going to show our calculations. 11,250 times 12 divided by 6. Then we get our answer, which is 22,500 divided by 150,000 multiplied by 100 divided by 1. Then we get our answer, which is 15%. Then 3.3, complete the extract from the fixed asset note for the year ended 28 Feb 2025 by completing all the relevant amounts indicated. So now let's go and check what is our A. So A, we are required to calculate the additions at cost price. So we know our additions at cost price, we recorded them, it was 216,000. So A, we have 216,000. Then B, we are supposed to calculate our disposals at carrying value. So now, how much is the cost price of the vehicle that you have sold? It's 140,000. So we're going to say 140,000, which is the cost, minus the accumulated depreciation. The accumulated depreciation at the beginning of the year, it was 59,360. So minus 59,360. We get our carrying value. Then we also minus our current depreciation. How much is our current depreciation that you have calculated? It's 5,376. So minus 5,376. Then we get our answer, which is 75,264. Then C, it's our depreciation. So we have already calculated our depreciation, which is 124,048. So here we have 124,048. Then D, we are supposed to calculate our cost price at the end. So how do we get our cost price at the end? We're going to say our cost price at the beginning, which is 850,000. Plus our additions at cost, which is 216,000. Then minus the cost price of the vehicle that has been sold, which is 140,000. Then we get our answer, which is 926,000. Then E, it's our accumulated depreciation at the end. So we're going to say our accumulated depreciation at the beginning, which is 320,000. Plus our current depreciation that you have already calculated, which is 124,048. So plus 124,048. Then we minus the depreciation of the asset that was disposed, which is 59,360 plus 5,376. Then we get our answer, which is 64,736. So 320,000 plus 124,048 minus 64,736. We get our answer, which is 379,312. Then F, it's our carrying value at the end. We're going to say our cost price, which is our amount in D. So now our cost price, it's 926,000. So we have 926,000 minus our accumulated depreciation, which is 379,312. Then we get the carrying value at the end, which is 546,688. Then G, we have to calculate depreciation for equipment. So depreciation for equipment, we are firstly given the total depreciation of the new, which is 11,250. So here we have 11,250. So now, if we can check our information, we never sold any asset. Instead, we have bought a new asset. We are given the depreciation of the new asset. So we have to calculate the depreciation of the old. They said which method we are using for equipment. We are using the cost price method. So what is the formula of calculating depreciation using the cost price method? It's our cost price. We have our cost price of 560,000 multiplied by our rate of depreciation. We have already calculated the rate of depreciation, which is 15%. So you're going to say multiplied by 15%. Then we get our depreciation, which is 84,000. If you can check, our depreciation of 84,000, it's more than our carrying value of 56,000. So now, if our depreciation is more than our carrying value, we use what we call the 1 rand method. How do we implement the 1 rand method? We're going to say our carrying value minus 1 rand. Then we find our depreciation, which is going to be 55,999. So 11,250 plus 55,999. Then we get our answer, which is 67,249. Then our age, it's our carrying value at the end. We are given our cost price at the beginning, which is 710,000. Okay. Now let's get the accumulated depreciation at the end. We're going to say our accumulated depreciation at the beginning, which is 504,000. H, we are calculating the carrying value at the end. So we're going to say our carrying value at the beginning, which is 56,000, plus our additions at cost, which is 150,000. Then minus our total depreciation that you have already calculated, which is 67,249. So 56,000 then we get our carrying value, accumulated depreciation at the carrying value at the end, which is 138,751. So here we have 56,000, which is our carrying value at the beginning, plus our additions at cost of 150,000, minus our total depreciation of 67,249. Then we get our answer, which is 138,751. So 3.4, calculate the profit or loss on the disposal of vehicle. Give advice on what should be taken into account when deciding to sell an asset. So now let's go check the cost price of the vehicle that you have sold. So the cost price of our vehicle that you have sold is 140,000. So we're going to say we are at 140,000. Or let me check, do we have the disposals at carrying value? Let's go to our information B. So B, we have our disposals at carrying value, which is 75,264. So if we sold the vehicle for more than our carrying value, we have made a profit. And if we sell it for less than the carrying value, we have made a loss. So our carrying value is 75,264. So now, how much did you sell it for? We have received 73,360, which is less. It means that we have made a loss. So to calculate our loss, we're going to say 75,264 minus the amount that you have received, which is 73,360. Then we get 1,904, which is our loss. Then advice, we can say, give advice on what should be taken into account when deciding to sell an asset. So now we can sell an asset if it still meets the production requirements. Also, we can sell the vehicle if the cost of maintenance is too high. So now we are done. 3.5. The business must establish internal controls to prevent the misuse of vehicles. We have been approached to help improve internal controls. Give 2 internal controls that can be implemented. So first thing we can say, install car trackers to monitor the drivers. So now we can also say physical inspection. Physical inspection before and after use. Then you can also say access control. So we are done with our question 3. We can now move to question 4. So question 4 is our problem solving. The max is 12 marks, the duration is 10 minutes. Bali Clothing Stores sells golf t-shirts and shirts. The owner, Bali Clothing Store, has provided information and requested advice. The table below reflects annual figures of the Bali, so let's annual figures of Bali Clothing Store for the financial year ended 31st January 2025, as presented by the bookkeeper. So we are required to identify 2 problems for each product for 2025. In each case, give 1 piece of advice to address the problem. So now, let's start with our golf t-shirt. So if you can check our golf t-shirts, our opening stock, it was 407 units purchased, is 800, then we have units sold. Then while our closing stock is 650 units. If you can check, our closing stock is high. So that's the first thing that you are going to quote. So too much stock on hand. Then you also quote the figure. Our closing stock is 615. Then if you can also check from the previous year, It increased by how much? 615 minus 407. It increased by 208 units. So now, the advice that you can offer here, we can say, invest more money in advertising. We can also say, give discounts for bulk purchases. Then if you can go back and check the second problem, the markup of 75% is too high. Then let's check the markup from the previous year. It increased from 50% to 75%. So now we can also check the stock turnover rate. We can also use the stock turnover rate. Then if we can check, we can also check the purchases. Even though the sales are low and the opening stock was high, they purchased the same number of units. So now, advice for the markup of 75%, you can say reduce the markup. Reduce the markup to increase sales. We can also say have clearance sales. Now we are done. Then number 2, now we have to check the problems when it comes to the sheet. So now, if you can check our sheets, look at the returns. First thing, the returns, it's 90. Also look at the sales, units sold. It decreased from 2,260 to 1,970. Even though the markup was still the same, okay? So we're going to say the problem, it's number of units sold. Decreased. It decreased from 2,260 to 1,970. So now, advice, you can say increase or invest more money in advertising. So increase advertising. Then offer discount for bulk purchases. When they buy in bulk, we offer them discount. Then problem number 2 that you can quote is the returns. Look at the returns. The returns increase from 78 to 90. So now for the returns, we can also say change a supplier to find quality material. We can also say improve quality to reduce returns. Okay, it also affect this one. We change the supplier to find quality products. Another problem that you can use here, if you can check, let's check our selling price. Our selling price is 212,500. The number of units is 1,970. So 212,50 multiplied by 1,970. We get our answer, which is 418,625. But the amount that we have received is 349,500. It means we have missing cash. That's the only thing that you can use. Also, we have missing cash. And how much is our missing cash? Our missing cash will be 69,125, because we're going to say 418,625 minus 349,500. So guys, we are done with our question paper. Hope you guys enjoyed the video. Hope to see you guys in other videos that are coming. Thank you.